Hey everyone, welcome back to Pocket Fuel today. We're going deep on a trend that's about to reshape money, combining AI plus green investing. Yes, technology and sustainability are no longer separate paths. In 2025, they're merging. If you're a beginner, this video is for you. I'll walk you through why this is big, how you can get exposure safely, and which picks make sense for small budgets in the US and Canada. Let's jump in. First, why should you care? Why is AI plus green investing trending right now? AI is now powering everything, from climate models to energy grids to smarter infrastructure. At the same time, the world is pushing hard for decarbonization, clean energy, and sustainable solutions. These two forces are colliding. AI is helping companies run greener, optimize energy, reduce waste. According to sustainable investing reports, one of the top trends in 2025 is AI's integration into ESG decision-making, helping assess climate risk, predict sustainability performance, and monitor environmental impact. In the US, sustainable investing assets are already massive, and regulators and data tools are pushing transparency. So there's momentum, regulation, and purpose all aligning. That's where opportunity lies. Before you jump in, you need to understand the core ideas and the risks. Concepts: thematic, sector ETFs, funds that focus on clean tech plus AI, renewable infrastructure plus AI systems, etc. AI-powered ESG tools, platforms that analyze companies' environmental impact using satellite data, big data, etc. Green, DAR, ESG bonds with AI underwriting, bonds funding eco-projects, evaluated with AI for risk, sustainable infrastructure, plus AI platforms, data centers powered by renewables, smart grids, etc. Risks to watch. 1. Greenwashing. Some companies just claim green plus AI without substance. 2. Regulation, policy shifts. Incentives can flip. 3. Tech risk. AI models wrong, data limitations. 4. Valuation risk. Hype could already be priced in. You'll want a balanced approach, not an all-in bet on hype. Now the fun part, how you can ride this trend, even with small amounts. Here are my top 3 picks. 1. Base Art Foundation, Core Index Plus. Sustainable ETFs maintain a core investment in broad market ETFs, like S&P 500 or TSX, but tilt slightly with ESG versions. For example, in US, look for low-cost ESG, sustainable ETFs, those that exclude fossil fuels, etc. In Canada, track TSX with ESG filters or clean energy ETFs. This gives you stability and exposure to the broader trend without taking wild risks. 2. Growth, thematic exposure, AI plus, clean tech, green ETFs. Allocate a smaller chunk to ETFs or funds focused on AI plus green technology. For example, an ETF that holds AI, smart grid companies, renewable energy firms, battery tech. This gives you the upside if this trend takes off, but only with a portion of your portfolio. Don't go all in. 3. Safety. Anchor, green bonds, high-yield ESG instruments. Green or sustainable bonds. These fund environmental projects and are safer than stocks. Some fixed-income ESG funds or high-yield savings accounts tied to green initiatives. Use this as your buffer. Part of your money invested, but less volatile. Let me show you an example. Allocation for someone with a small budget. Type % of portfolio. What to buy. Core Foundation. 50%. Broad index. Plus. ESG filter fund. Growth. Thematic 30%. AI. Plus. Clean tech. Green ETF safety. ESG income. 20%. Green bonds. ESG fixed income. So if you had $100, it might look like $50 in a broad ESG or sustainable index, $30 in a thematic AI green ETF, $20 in green bonds or sustainable fixed income. Over time, you rebalance. As theme grows, you can adjust. Also, use fractional shares. Many platforms now allow you to buy parts of high-priced ETFs or stocks. Here are some final tips so you avoid mistakes. Always check expense ratios plus fees, sustainability. Thematic funds sometimes come with higher costs. Use ESG scoring tools or platforms, some AI-based, to vet fund holdings. Don't rely only on hype. Dig into company sustainability reports. Diversify. Don't allocate 100% to this trend. Regularly review and stay updated. This field evolves fast. If you follow this, even with small money, you can ride a forward-looking trend. All right, guys, that's your 2025 roadmap for combining AI plus green investing. If you found this helpful, hit the like button, subscribe to Pocket Fuel, and comment below. Which of these 3 investment ideas do you want me to analyze next? Thanks for watching. Stay smart, invest small, grow big. Catch you in the next one.